heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. And it's M&A Monday. AMD to buy server maker ZT Systems. And it's to fight back against Nvidia in the data center space.
General Motors slashes software jobs after a big push to bolster its digital prowess. We have the Bloomberg exclusive.
And sports streaming platform Fubo continues to surge after rivals were blocked from launching the Venu Sports service a week before rollout. But first, let us check in on these markets. We managed to climb the wall of worry. All eyes on what is happening, of course, in Jackson Hole at the end of the week. But for now, tech stocks actually just managing to trade up about 0.3% on the Nasdaq 100. What's interesting is stocks rebound, as bonds rebound, as we see money move into gold after what had been significant concern about the US economy in the last couple of weeks. Well, that climbing back is not happening for the world of crypto. In fact, August again showing that we're having a pretty dire month for the asset. We're off by another 2% on the day, Ed. This more is all about actual supply side. This is about selling coming from the US government of crypto that has been sort of taken away from certain wallets, from certain holders, confiscated. Does it get back into the market? Do we therefore see pressure on the price? But Ed, what are you watching on the micro side of things?
Let's get right to that AMD deal and piece of M&A. $4.9 billion deal to acquire server maker ZT. It's the best performing stock on the Philadelphia Semiconductor Index, a gain of almost 3%. But it was actually a pretty slow start with that news breaking this morning. What's this about? It's about AMD's move into being a systems vendor, which reminds us of another big name in that space, Cara.
Yeah, it does. Ian King is the person who covers AMD, Nvidia, of course, which is the elephant in the room that AMD is trying to tackle here.
Yeah, no, that's absolutely right. Nvidia has basically made it easier for all of its big customers to adopt these systems. If you need a server, we'll give you a server design. If you need networking, we'll give you networking. We'll bundle everything together. We'll do a lot of the engineering for you to speed this up. And now what AMD is saying, hey, we can do that too. Here are some engineering capabilities that we've taken hold of, and come and use our gear.
We've used these numbers before, but they're worth recounting. AMD will probably do $4.5 billion of AI accelerator sales this year, while Nvidia will do $100 billion, and that gives you a sense of where we're at. But on AMD's side, M&A is becoming a bit of a tool and a theme. This is the second deal in a number of weeks and months. What are they trying to add?
Yeah, it's all of these sort of engineering capabilities that go beyond their core competence, which is to design chips. They're basically saying we will give you, whether it's the software, the models, the designs of the actual servers themselves, we'll give you these things. We'll help you to adopt our chips. It's a facilitator, if you like, and it's really what NVIDIA is doing.
Systems vendor, you did a good job in your first answer, but what does that mean in reality? In the real world, when we talk about training AI models with high-performance GPUs, what does that look like?
You have to think about a data center as not a room full of computers, but as a computer. It's almost like a one entity in itself, with all of the chips and all of the servers all connected tightly together to all of the memory, to all of the networking. Putting all of that together is extremely difficult if you want it to work efficiently. So that's really what we're talking about here. There are only a few companies that can do that. Obviously, the Dells and the HPs want to offer that expertise as well, but that is the sort of area that AMD is trying to step into.
Let's just talk about ZT Systems, however us Brits are going to say it on the show. It's a New Jersey-based company. What do they keep? What do they sell off? Who are the executives who come over?
Yeah, no, that's a good question, and there was a lot of confusion on the call this morning as to what exactly is going on. A company that has about $10 billion in revenue, that revenue is primarily from selling hardware. The manufacturing operations that produce that hardware are going to be sold by AMD. AMD just wants about 1,000 engineers and those engineering leaders who will basically show their customers how to better implement AMD-based systems. So there's going to be a big breakup, and AMD is not going into the business of making servers.
We talked about this being M&A Monday. There are some other big deals happening across different industries. But how acquisitive is Lisa Su at this point?
Well, they put that in the release. They said, look, we've spent, $1 billion or so in the last 12 months on acquiring capabilities that are going to make us a better company. And I think it's reflective of, A, the market that they're trying to push further and further into, but B, they've got more money these days, right? They're a very solid company that's doing well. They're solidly profitable, have been for years, and the revenues are growing. So she's trying to use that financial clout to basically make her company stronger.
And in the time we've been speaking, AMD's just hit a session high, up 3.4% this Monday morning. Bloomberg's Ian King, thank you very much. This all comes as investors are becoming more nervous about some Nvidia downside. Tech profits are slowing. Tangible results from investments in AI remain to be seen. Ameriprise Financial Private Wealth Advisor Jason Betts discusses the investors' view, and we've talked about how the market in some ways is treading water. In the first instance, the Jackson Hole this Friday, but actually August 28th and Nvidia earnings is a macro-level event. How do you approach that?
I mean, the first thing I'll say is, there's a saying that the devil's in the details, and right now, the devil is in the data as far as the market is concerned, and that's actually refreshing. In my opinion, we've seen a fair amount of market complacency through much of this year. Obviously, we saw the rout here at 2.5, 3 weeks ago between, weaker tech guidance, between the very lackluster jobs report, which carried over into Monday with the yen carry trade exacerbating all of that, the market threw a temper tantrum. We've seen the data improve here a bit. We've actually seen some pretty good data over the past couple of weeks, and the market has clearly reacted positively to that. So moving forward, everyone's going to have their eyes, as you said before, on Jackson Hole. We're going to have our eyes on just the rest of the tech earnings here as well. So I'll have my eyes on that, and other than that, it's pretty much business as usual.
In the first part of the earnings season, the capital expenditures data from the hyperscalers was a clear story. The bit that's less clear is the top-line growth in all of the hyperscalers' customers. Does that worry you? Do you sort of analyze that part of the market?
Yeah, I mean, there's always going to be a concern about when valuations seem like they might be stretched, then we're always going to be keeping a sharp eye, both on top line and net earnings. So again, going to have our eyes on all that. I think right now that we're in a position where, if I would encourage clients to take a look at their portfolio and look under the hood and look carefully for any over-concentrations in both the tech space as well as the AI space. Investors have gotten away from that over the past couple of years, and they've actually been rewarded for that. And just because you've been rewarded for it over the last year or two doesn't mean that you should continue to not do it. So I would encourage investors right now to really look under the hood. Anything that's a high flyer that's making up too much of a concentration of the portfolio, consider trimming it regardless of what we see with data unfold moving forward.
More broadly, should you be selling down technology when we're still only about 5% off of the record highs of the NASDAQ 100?
I mean, I think that if we just look at valuations as a whole, these tech stocks sold off 20 to 30%, and a lot of them at those levels were still trading at 60 times earnings. So now we're bucked back almost to the all-time, back to the all-time highs, or 5% below that. We need to see, in my opinion, continued strong, very strong earnings data and overall data for that trajectory to continue, in my opinion. Otherwise, I think we're going to start to see some hangover effect, and we're going to start to see, in my opinion, maybe a market that gets a little bit more sobered on this AI trade, because for right now, we're treating it like it's going to be basically a money trade, and we're not paying attention to any of the expenses or what are the costs, what are the taxation, regulation, consolidation, competition. What's that going to look like? What's that going to do to net profits? I guess that's really all I have to say about that.
Okay, Jason, I'm reading between the lines that you feel there's hype here in AI. So if you want to remain committed in technology, but you don't want to remain so committed on certain AI high flyers, is there anywhere to put it?
Yeah, and this is going to be ironic that I say this, because their valuations are also appear to be stretched and are only, they're only probably about 5% off their highs, and that would be just cybersecurity. But the difference being, in my opinion, a much clearer picture moving forward on tangible earnings. So we know there's bad guys that are going to continue to get better, regardless of whether the AI trajectory moves at this kind of, what I think is a perfect case scenario is what the market is pricing in right now. So if that happens, we're going to need a lot more cybersecurity. And if it doesn't happen, the bad guys are still going to be out there working hard and getting better. And so I think for a long-term play, cybersecurity is probably the strongest. And also, if things get a little shaky or weird, might be actually a bit more defensive in the technology space at this moment.
Jason, do you include CrowdStrike in that?
Can't talk about individual names, unfortunately, but I would just say as a whole, you know, would say cybersecurity is, you know, in my opinion, it's a pretty big thing.
It sounds like everything we've discussed so far, right, that it's the economic data that ties all of this together. And so your action relating to technology sector depends on that data, but why? Because of your view of what the Fed will or won't do.
So I think what I heard was just asking about, you know, regarding to the Fed and what it will or will not do. My personal opinion is that regardless of what the Fed does, first off, I think we're going to get we're going to get 25 basis points in September. I think it's kind of funny that not funny in a good way necessarily, but that, you know, a few weeks ago we had calls for emergency rate cuts and definitely 50 basis points, and then, you know, all of a sudden the sky was no longer falling. All of a sudden the data wasn't as bad as it seemed. And so, you know, regardless of what the Fed does, I think the Fed does 25 basis points and we may see more. I think we're going to get we're going to have a better idea about that, obviously, after Friday. But regardless of the Fed's movement, I'm not convinced that necessarily has a huge impact on stocks over the short term.
Ameriprise Financial Private Wealth Advisor Jason Betts. Some calls there. We thank you for it. Now, British tech entrepreneur Mike Lynch, of course, the CEO of software firm Autonomy, is among the people missing after a super yacht sunk off the coast of Sicily in Italy, according to a source. One person has died. 6 others, including 4 UK nationals, are missing. That's after the 56-metre boat called Bayesian sank this morning near Porticello. It's all according to Associated Press. Lynch's wife, Angela Bacares, is among those rescued, the person said. Ed.
Okay, coming up on the show, GM is laying off more than 1,000 software engineers. We'll have all the details next. And Apple is working to make another key component in-house. But is the investment worth it? We'll discuss. This is Bloomberg Technology. General Motors is cutting more than 1,000 software engineers as the automaker moves to lean up its software and services organization. That, according to a source, with more than 600 of these layoffs to happen in Michigan. Bloomberg's Detroit bureau chief David Welch broke this story and joins us now. You've written a lot about GM's big push into software and services, and it seems, David, like they're kind of peeling that back a bit.
Yeah, I think the bigger picture here is they're peeling back on a lot of these big technology bets. And to kind of understand the bigger context here, you have to go back a few years to their Investor Day presentation when they said they were going to double revenue of the company by 2030. And that was with electric vehicles, autonomous vehicles, and these software-related services. And they never really explained what those were exactly, nor did they really give examples. But with the electric Chevy Blazer, we saw that they had things that could find you charging and plan it on your route. They had their own version of CarPlay, actually sort of a competitor or a replacement for it. And this group developed stuff like that, as well as a system that would control the car, braking, battery management, all of it. And, you know, they didn't say this. What they said is they want to streamline the group so they can move faster. But I have to think that with them delaying some of their electric vehicle production, canceling at least one EV, maybe more, and with the slowdown in autonomy, that maybe they just don't need as many of these people because they aren't going to be doing quite as much as they thought they were when they hired them all some time ago.
We're showing the statement from GM, which basically confirms the broad idea of cuts but doesn't sort of quantify them. Does GM have a business yet, David, selling software and services? You know, it is a big focus of the pure play EV names, but also the legacy OEMs as well. How much money can you make selling updates, essentially?
they don't have much of a business. I mean, they've had OnStar for years, which does have some, it has had some concierge services and navigation and that sort of thing over the years. And they do still make money off of OnStar. And they've tried certain things with linking up their drivers to Starbucks or other vendors like that. But look, if they still make any money off of that, it's negligible. It's something they do want to build. And the whole idea behind this, what they used to call Ultify, now it's just their internal software system, was to control the entire car, not give control of that to Apple or Google or anybody else, mostly Apple being the one they wanted to avoid, because if there was money to be made off of services, they'd be able to do it. And they still may, but it's just not something that's really generating revenue now because it's so new, and it looks like they're going to be reining it in a bit.
Interesting that, of course, to stop the money flowing to Apple, they took executives from Apple. Was it David Richardson and another joining to help lead the software team? Maybe they're thinking about just doing all of this more with less.
Well, they are certainly, and GM has described it basically as a streamlining. And look, there are times when companies launch into some big initiative like this, and they just hire too many people, and they realize once they kind of get into the meat of it that they can develop what they need without so many of them. And this is a pretty significant cut, though. More than 1,000 people, most of them being in Michigan. It's quite a group to trim out if it's just streamlining.
Well said, David Welch. We thank you. And let's turn our attention to Apple at the moment, because its Hardware Technologies group, the chip builders behind the company's in-house processors, is working on a new critical component. But the payoff may not be seen for years. Right now, iPhones use cellular modems built by Qualcomm. It's a reliable, best-in-class chip for basically most of the global smartphone industry. But in the years to come, Apple hopes to have a better in-house replacement. For more, and writing about it, is Bloomberg's Mark Gurman. And this is a longer-term bet. When will the payoff come? Why have they shifted away from Qualcomm in the long term?
You know, this is an interesting one. The project to develop their own cellular modem really started because they were upset with how much Qualcomm was charging them. The royalty fees that Qualcomm had been charging Apple for years is something that the company is simply not used to. Apple typically gets the best bang for their buck. They typically are the ones that are the more controlling in the supplier relationships, but that sort of was spun on its head with Qualcomm. And Apple really had no choice but to work with Qualcomm, because if Apple wanted to move to 5G, there really was no other game in town other than the chip maker from San Diego. And so that was really the start back in 2018 when they started working on this modem. Development ramped up around 2020. They acquired Intel's modem group for about $1 billion in 2019 to really jumpstart that development. But it's interesting because unlike the move to Apple in-house processors in the Mac, unlike the move to Apple in-house processors for earbuds, for smartwatches, for set-top boxes, the modem from Qualcomm is actually best in class at this point. You're not going to bring better performance to the table than Qualcomm. And if you do, this is not something that can be noticed by the consumer. So the bet here is that this is going to save costs. And then maybe 5 years from now, over time, being able to shrink that modem down to an Apple-sized chip, to put it on the same motherboard and the same SoC, the system on a chip, as the existing Apple components. Maybe you can shrink down the internals of the phone to add other new features to create new form factors. So it's a mix of cost now and hopefully new designs later.
Mark, you also went back to the idea of a tabletop robot in this week's Power On. Just explain the basic design. We don't have a visual right, but I think it's, in basic terms, worth telling the Bloomberg Technology audience what it is they're planning to bring to us.
So Apple's next big thing is robotics. And the first robotics device you're going to see from Apple is going to be a tabletop robot. It's essentially a gigantic iPad screen connected to a robotic arm or a robotic neck. And the display can move to follow your head movements. If I'm on a FaceTime call with someone and that other person begins speaking that's in the room with me, the display can know that it's them speaking and tilt towards them. If you are on a FaceTime call with someone else, and let's say that person on the other line is nodding their head or making various head movements, that screen will be able to follow the head movements of that other person. You'll be able to tell the device to look at you, and it will turn towards you. And so this is a robotics exercise. The company's aiming to get down to a price of around $1,000. The big picture here is that Apple's trying a lot of new stuff. right? And I think one day we're going to be having more in-depth discussions about mobile robots, similar to the Amazon Astro. I think the idea of Apple getting to humanoid robots is also a real possibility a decade from now.
Bloomberg's Mark Gurman. Terrific. Thank you very much. So coming up on the show, there's been a broader market upswing this month, but Bitcoin has been left behind. We're taking a closer look at the 10% drop in Bitcoin in the month of August so far. Also, a quick check on shares of Fubo, up more than 27%. They gained 16% Friday after a judge blocked Rivals, that coalition of streamers, from launching its own sports platform just a week from its scheduled launch. We're going to get a lot more detail on that later in the show. This is Bloomberg Technology.
Let's talk crypto, because Bitcoin and actually the wider crypto market, they're now seeing some sharp losses this month, even as global stocks are pushed back towards record highs. Now, look, Bitcoin has been falling roughly, 10% in the month of August. Over the same period, though, global stocks, if you look at the MSCI index, it's up more than 1%. Gold is up all-time highs. Even the global bond gauge is up nearly 2%. So why the lagging? Bloomberg's Shonali Basak is here for more. It's supply side, right? This is a potential for government sales.
There were a lot of overhangs into the summer, if you think about it. But the other problem here is, what is the next catalyst? If you thought about the beginning of the year, that drove Bitcoin to new record highs. It included that spot Bitcoin ETF. And now you do see financial advisors at least thinking of or starting to adopt comfort in investing in those spot Bitcoin ETFs. Maybe they'll buy the dip. Seriously, there has not been enough dip buyers here to bring us back to those record highs. We're floating below 60,000 still. There are a few things going on. When you talk about the supply side here, there was news in recent days, Arkham Intelligence finding that the U.S. government has moved about $600 million worth of confiscated Bitcoin from Silk Road over to a Coinbase wallet. Now, the question is, are they selling those Bitcoin off or not? The question becomes especially interesting when you think about Donald Trump's proposal here to create a national Bitcoin reserve that would therefore be backed by confiscated Bitcoin. Remember, the U.S. has 12 billion worth. We're only talking about 600 million more recently. The question is whether they're actually selling it. But yet, I will go back to this issue here of what is the next catalyst. At what point do people buy, not sell? What would cause them to?
Real quick, Shonali, this just Bitcoin or the market broadly?
The market broadly. You do have Bitcoin and other assets. Top 100 digital assets recently dropped on August 5th to the worst level since November of 2022. All as the DNC gets started, by the way, Ed. There's a lot of questions about whether the Harris administration would be tough on Bitcoin. So interesting days ahead.
Such a pro, Shonali Basak, because that's exactly what we're talking next. The DNC in Chicago. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's talk about the DNC, Ed, because it is kicking off as Kamala Harris is kind of riding a wave of momentum. Meanwhile, Republicans, they're working to leverage that advantage with voters by attacking her new economic agenda. I want to discuss what to expect in this week in particular. Kaylee Lines is there. And I'm interested, Kaylee, as we think about, well, from a tech perspective, we're thinking about crypto and AI, but more broadly, what are generally we waiting to hear from the DNC?
Well, this is certainly going to be defined by energy and enthusiasm, as the Democratic Party really has been reinvigorated by the candidacy of Kamala Harris, as it was just 4 weeks ago that President Biden decided to no longer seek re-election, and she became the Democratic nominee. That is already official thanks to a virtual roll call that happened earlier this month. So really this week is all about ceremony and the pomp and the circumstance and really trying to unite the party around her. Now, President Biden himself will be speaking this evening in a speech that may be part about his legacy, but also pitching it forward to the kind of president he believes the person he chose as vice president, Kamala Harris, could be. He will then be getting out of town, but we're going to have, of course, a number of other high-profile Democrats speaking throughout the week, with Tim Walz, the vice presidential nominee, speaking Wednesday, and then culminating in Harris's address on Thursday. The question will be how much that address really is about policy. We're starting to get more on policy from her. She, of course, outlined her economic agenda last Friday in North Carolina. Already it is being met by criticism by Republicans, even some economists, and Donald Trump over this weekend was trying to characterize her as Comrade Kamala, suggesting some of the policies, including when it comes to price gouging, could be seen as communist more so than capitalist. So certainly you're going to see those kind of attacks coming from the other side of the aisle this week, while the Democratic side of the aisle is going to be here in Chicago trying to reinforce their candidate that does have some momentum coming into this. As new polling, including one from the Washington Post, ABC, and Ipsos this weekend, shows her leading Trump nationally by 4 points, 49% to 45%.
Kaylee, the principal difference between what's happening this week in DNC and RNC is that we have the ticket, right? Harris-Walz. But are there areas of unknown or surprise that make each of the days exciting, or something specifically to tune in for?
Well, there always is room for surprise, Ed. I think we've come to learn that in this election cycle in particular, as many of us have been surprised on quite a few many occasions. What could be more uncertain about this convention in particular is the degree to which protests over the war in Gaza could be disruptive. We've already started to see them here in Chicago. There were some last night that were causing quite some issues with traffic, especially for me as I tried to get to the hotel. And there are more planned throughout the duration of the week. The question is going to be to what extent that remains outside of the actual convention itself, and to what extent it may bleed into the actual United Center where the proceedings are taking place, how disrupted they would be, could be, whether or not there would be or could be any violence. We haven't had reports of that yet, but certainly that is something we're keeping a close eye on, as that is one of the very tangible divisions within this Democratic Party. While it has been able to really unite around Harris to a large extent, especially when we're thinking about party leadership, sitting lawmakers, there does remain that deep division within the Democratic electorate itself, as evidenced by the fact that some delegates were showing up here in Chicago as uncommitted, because many voters in states, including Michigan, decided to elect to vote for uncommitted or the equivalent over President Biden over protests of that ongoing war between Israel and Hamas.
Kaylee, that's a key talking point. Are there any technology elements that we should be keeping an eye on for our audience in particular? I mean, we're always thinking about what the crypto viewpoint might be from a Harris ticket, but any other areas?
Well, certainly there is an element here of questioning what kind of crypto policy Kamala Harris could adopt. There was a Crypto for Harris virtual event that happened just last week that even the Senate Majority Leader, Chuck Schumer, took part in. We've spoken with a big crypto advocate in Congress, Congressman Wiley Nickel of North Carolina, who has said he is actively involved in pushing the campaign to be more open to the innovation the industry can offer than has been the case under the Biden administration. But we have seen this campaign in general really embrace technology, especially social media. We have seen a lot of those kind of viral meme aspects of this campaign showing up much more for the Harris ticket than the Trump-Vance one. And I would note we're seeing that in the ad buys as well. The Harris campaign has announced $370 million of ad buys between Labor Day and the election. $200 million of that is digital advertising in particular. So really venturing into that realm beyond just your traditional TV ads. As for any other technology policy, we're going to be looking to hear more of that throughout the course of the week. But we could probably expect that the speech Harris will give on Thursday night is going to be much broader strokes than getting into really specific policy recommendations or platform.
Bloomberg's Kaylee Lyons, another very busy week for you on the ground, and we'll tune in each day. Thank you very much. Now, the Democratic ticket is set to address a number of key themes. Kaylee went through some of them at the DNC this week. One of them is labor unions. From Apple and Amazon to Samsung and Tesla, recent unionization efforts have been hitting the tech sector. I'm going to break it all down with Bloomberg Industry Group reporter Ian Colgren. And actually, a recent spark point probably was the complaint or enforcement complaint by the UAW in reaction to that Musk and Trump spaces. You know, that's the scene setter here, right, Ian? That this is a focus on both sides of this election race.
It's certainly one of the big ones, and it is one of the tools that the UAW and unions as a whole are using to divide themselves from Trump and who they see as Trump allies like Elon Musk. This was certainly not an expected complaint, and it had the net effect of really changing the Teamsters and some other middle-of-the-road unions from being sort of ambivalent about Trump and maybe willing to entertain his side, hear him a little bit, to being fully against Trump now.
What's interesting is that, well, Tesla, certainly Elon Musk, not the only technology name that has seen movement for unionization, maybe pushed against it in some way. But I'm thinking, what, Apple store workers in Oklahoma City, they're given the union leaders permission to call a strike if talks don't go well. What ultimately has been technology's sentiment towards unions, unionization, organized labor?
Well, it's been a little bit mixed. Traditionally, the technology sector has not been in favor of unions, has been rather against unions in seeing them as an impediment to the kind of startup, move fast, break things, innovate quickly culture that has defined Silicon Valley and its successes. But increasingly, workers, as you noted, are turning to unions to solve some of the more top-down kind of quality of life problems that workers started seeing in some of these businesses, especially, as you noted, in Apple stores, in the retail front. That all really started in the pandemic, when many workers who I've talked to and have spoken publicly felt like they weren't being listened to by their bosses.
We set the scene, Ian. It's that we think this issue broadly will be discussed at the DNC. But as someone covering the beat, do you have a real sort of sense of the Harris policy? Is there something codified that you can say, OK, this is what Harris's policy platform will be in this election race?
Well, certainly there are plenty of open questions right now to see if Harris really will pick up the torch from Biden in being, as he described it, the most pro-union president in history. Many unions agree with that sentiment, and it's notable that they really, unions, I mean, really stuck with Biden until the very bitter end. There was not one major union that came out against Biden, even privately, as far as we know, told him to drop out of the race. That said, they were also very quick to back Harris, rallying around her as the next best choice. They noted that she chaired a White House labor task force that Biden had convened. That's true. It's a little bit debatable how much that actually did for unions and how much of it is just for show. But they're sort of taking her at her best word right now that she is going to be as pro-union as Biden was. Of course, one thing we're going to be watching closely is the constant tension between some of these big Silicon Valley donors who tend to give to Democrats, and then this more organic, worker organizing that Democrats say they're for on paper, but can conflict with some of their best interests in the moment.
Ian Kilgren, putting it delicately for us, Bloomberg Industry Group, we thank you. Meanwhile, it's time for Talking Tech. First up, Lime is entering the Japanese market. Look, it's the Uber-backed scooter company, and it's launching its services today in Tokyo with 200 scooters and 40 charging ports. It's a San Francisco-based startup, of course, and it's entering a pretty growing market, pitting itself against the likes of Tokyo-based Loop, which controls 90% of the domestic market. Meanwhile, Elon Musk's X is going to close operations in Brazil. The announcement marks the latest step in a showdown between Musk and Brazil's Supreme Court Justice, who is spearheading efforts to combat fake news, hate speech. While operations in the country will be shutting down, though, the service will remain available. And Africa's MTN Group posted its first loss since 2016. Now, the country's largest wireless carrier by revenue has reported a loss of $450 million in the 6 months through June. This is as the devaluation of the Nigerian naira crimped income. MTN has about 77 million customers in Nigeria and derives about a third of its earnings from the nation. Ed, what are you looking at?
Yeah, good summary of the news. Let's get to the technology sector in equity markets and at the index level. Nasdaq 100 is interesting, modestly higher, but if those gains are held, we're on for our 8th straight day of gains, longest winning streak since November. The SOX, the Philadelphia Semiconductor Index, sort of modestly lower or flat, but it had been down more than 1.4% earlier in the session, and an area of real outperformance are the US listed shares of a number of Chinese technology names. Look at the NASDAQ Golden Dragon China Index up almost 1.5%. The story is Jackson Hole this week, but we are treading water to August 28th and Nvidia's earnings, which are a big part of the market. Now, coming up, we're going to talk about the investing landscape in gaming with Amy Wu from Menlo Ventures. So great to have Amy back on the program. This is Bloomberg Technology.
It is time to discuss investing trends, but we're going to hone in on the gaming world. Of course, following that news of Epic Games launching a new mobile storefront after 4 years of the legal tug-of-war with Apple and Google over their App Store practices. Joining us now with a deep dive, Menlo Ventures partner Amy Wu, who of course leads gaming, consumer, blockchain investments for the firm, and it's always great to have you on the show.
Thanks so much for having me on the show.
What did you make of it? I mean, after 4 long years, how much has Epic had to give back, like let go in terms of market share by taking on this battle?
I mean, the costs are very large. In addition to the hundreds of millions of dollars of legal fees, they also gave up market share, right? Because in the last 4 years, you saw, Call of Duty Mobile, I think had something like 250 million downloads, several $billion in revenue. And so it's really exciting, I think, for everybody. Tim Sweeney, the developer community, also their investors, to see them back in the mobile platform. But they've still got a long ways to go.
I mean, you wrote a check for them when you were at a previous VC, Lightspeed Ventures. I believe Epic had been like a focus of yours. Do you still think that this is the company that you should be riding a wave on? Is Fortnite still dominant enough? Where else do you want to be sort of allocating to in this environment?
Well, right now, I think that you see Epic Games, they're very much trying to expand their audience, right? With the launch of UEFN last year at GDC, they're really trying to, expand beyond their young shooter audience into something more general, competing against Roblox. Mm-hmm. And so I think those are really smart moves. Obviously, Tim has been fighting the mobile battle for a while. I think it's exciting to see them come onto that platform, especially when they have games like Fall Guys that are really conducive to more of a mobile audience. And so I think that also in games, we're looking at mobile. There's been a little bit more M&A activity in the mobile game sector. We're looking at the intersection of AI in games right now. Some pretty exciting things have been happening. Leonardo AI got acquired by Canva recently. That's more in the tooling space. A lot of game devs are experimenting with using them. And so we are really actively investing in that space.
Amy, it's great to have you back on the program. I mean, you make a really good point, which is on the developer side of the community. In our coverage, we kind of emphasize that this is about the consumer having options to access. But what does it mean for a marketplace for developers when there are more than 1 or 2 platforms in which you can access mobile games in particular?
I think it actually, I think Tim Sweeney is seen as a folk hero to a lot of indie developers, and choice of platforms to launch games into is just better for developers, right? Having multiple competitors, they can, negotiate better pricing, et cetera. Before it's just Apple's 30%, fee app store, and so I think this is a net very much positive. But I think Epic had to go through a lot of hoops just to get their storefront launched in currently EU, not the US yet. I think Android globally, and so again they're sort of at the forefront fighting this fight, and it's going to be benefiting developers worldwide.
Amy, as you outlined, you were previously an investor in Epic. They have this goal, or Tim has this goal, 100 million new installs in quite a tight time period. Just reflecting on your knowledge of the company and that leadership team, is this a win for them? How are they doing now?
They're certainly putting a lot of capital at work. They're a privately held business, and so Tim can be a lot more aggressive. And, when he launched UEFN and their sort of user-generated content marketplace, I would say they had the most advantageous payout of any platform, better than Roblox at the time. And so that is, again, really great for developers. But I think that they have a long ways to go in terms of feature parity with Roblox. Also, just the discovery algorithms, right? Because you have to remember the Epic community primarily likes shooting games. And so to really expand their audience to a much more general audience has to be baked into their algorithms as well in terms of discovery. And so they're working on all of that. And I think think developers are patiently waiting for it. But the patience is finite.
Patience fighting. What's interesting is you were saying how you're looking at the AI theme within gaming, and much has been said as to how ultimately we'll suddenly have user-generated content so much more to be able to be built in. But I mean, whether or not games will be building themselves, that's much more. You led the latest round in Anthropic. How are you starting to see AI in gaming really start to lead to efficiencies, or not? Is it still a long-term bet?
Yeah, my partner Matt Murphy led the investment. It's the largest for Menlo. We're really excited about. So I think code generation is a pretty exciting application of generative AI LLMs, and so that could potentially be applied to game making as well. Now I think the challenge, and I think we saw this with the blockchain cycle, is that ultimately consumers care less about the technology. Yeah. They want to play something fun, and so we have to prove, and AI needs to prove that it can not only generate code, but generate it in a way that's actually quite creative in something that consumers want to play. And I think that is still, proof is out. We haven't seen anything quite yet. There's a lot of really interesting attempts, more in, I would say, low fidelity 2D games. But we're very actively looking at a lot of the teams that are trying to push that technology in the absolute sort of the farthest it can go in order to generate games.
Amy, we just have 15 seconds. Just an area in gaming or adjacent that you're really excited about right now?
I am excited about user-generated games, whether it is more social, also easier to build. Most Roblox developers are semi-professional developers, and so I think this trend around making it even easier is a really exciting one. It gives consumer more choice.
Creator economy, but for video games. Menlo Ventures partner Amy Wu, great to have you back here on Bloomberg Technology. Now, coming up, a judge bars a new streaming platform by Fox, Warner, and Disney from a sports service a week before launch. We break it down. That's next. This is Bloomberg Technology.
Back to Fubo, because we mentioned that shares were soaring, and they still are, after Fox, Warner Brothers, Discovery, and Disney were actually blocked by a judge from launching their streaming sports service just 1 week before its rollout. Bloomberg's Hannah Miller joins us for more, and it took investors of Fubo by surprise. Did it take you surprise, the fact that this was so close to the unveiling?
Yes, it was a bit of a shock. Venu has had a lot of buzz around it. They've been very optimistic about it, a lot of excitement. So the fact that this is blocked so close to the launch, that's pretty crazy.
The only question, I guess, is how much chance is there that the injunction kills Venu altogether, that it just doesn't launch?
Well, we know that Warner and Fox and they're going to appeal on this. They're arguing that, they have a strong case, that Fubo doesn't actually, add to the TV market that much, and that they're providing a skinnier option for customers to use. So we are waiting to see what happens. I think you can't rule Venu out yet.
It's interesting. Laura Martin, we speak to her often on the show from Needham, an analyst, saying the injunction she thinks gives it a 75% chance of killing Venu. But interestingly, she then says, look, maybe because of Turner WBD having lost the NBA rights, maybe sort of Disney and Fox go it alone, or ESPN and Fox do. What ultimately is the fight against this? What are the grounds with which the lawyers given the stay for the time being?
Yeah, so, a lot of this comes down to antitrust, and making sure that there isn't a monopoly raising prices for consumers. And, there are gaps here with the Venu product. There are missing football games with the NBA rights being lost from Warner Brothers Discovery. With the 2025 to 2026 season, there will be fewer basketball options for this service. So you could kind of see it both ways, that, there could be a place for this skinnier bundle, or that it really could end demand for services like Fubo.
Well, Hannah, real quick, we just have 30 seconds, but how is Venu supposed to work? It's number of companies in coalition.
Yeah, so this is supposed to be a skinny bundle. This is supposed to provide an offering for people who are into cord cutting, that they don't want to deal with cable, that they want to jump on this. It's targeting a younger demographic. And this is supposed to be something that you could see offerings from all three of these players, that you could jump to what you wanted, that you could tailor it and customize it to the sports that you like. Fubo is saying, hey, we already do that. We already offer a ton of sports. So it'll be interesting to see what happens with the appeal.
I have so many streaming bundles for sports already. Bloomberg's Hannah Miller, thank you very much.
Exasperation. That does it for this edition of Bloomberg Technology, Ed.
What a start to the week. Check out the podcast. You can find it on the terminal, on Apple, Spotify, and iHeart Online. From the team here in San Francisco, Karen and the team in New York, this is Bloomberg Technology.